It's Tuesday, the 28th of March, and we are on the FTSE 100. It's just coming up to the 8 a.m. close. The FTSE has pressed up into this key level of resistance right here at the 7320 area. Now we have just produced a very small pin bar at 7:50 a.m. What I am waiting for is to see if the market begins to break below this signal candle. If it does, I am going to be getting short on the FTSE 100. What I will do is, if the trade triggers, after the trade completes one way or the other, I will take you through a bit of the analysis that I've done on the daily time frame, the reasons for looking at this zone, and the reason for looking for that move back down. But right now, we're just coming up to the 8 a.m. open. I am waiting to see if this trade triggers. If it does, I will be getting short. Okay, we're just at the 8 a.m. open. The market has just opened and it has broken down. I have entered into the short position. Now, I want to be a little bit careful at these overnight lows right here for a potential reaction on the FTSE 100, but I am expecting this market to come down. As I've mentioned, I will go over the analysis when the trade completes one way or the other. I've got a 10-point stop on this trade. I am looking for between 10 to 15 points, so around about 1.5 to 1 risk to reward. So let's see how this trade gets on. Okay, so the market is just testing these overnight levels now. You can see we have paused, we're seeing small reactions. Basically, the market has created this level of support in overnight trading during the Asian session. And this is being tested at present. I'm happy to remain in this trade. I am expecting it to break down. What I do want to be a little bit careful of is the MA200 right here, which is dynamic support and resistance. I'm still looking for the 10 to 15 points on this trade. What we've seen on this 8 a.m. candle, it has just reacted off of this level and it's came all the way back up to round about here. So the market has reacted, buyers have stepped in, forced this candle all the way back up into the 7317 area. Now, this is why it's important when you're in a trade to only make decisions based around what the market is telling you once the candle closes. When the candle is forming, very often it's going to bounce around, certainly at the 8 a.m. open. The 8 a.m. open is a relatively volatile time. The market will often shoot up, make bullish moves, then fall back down very bearishly, can end up as a doji, and it's only toward the end of the candle, you can see these last 30 seconds here, that it is once again starting to come back down. Now, it's easy to panic when you're in a trade and exit because it starts to move against you on that 5-minute candle, but it is important to wait and to make your decisions based on how the candle closes. Now, obviously, if you're in a trade and let's say a news release or something comes out and the market starts spiking against you very, very strongly, then you do want to come out of your trade. But during normal trading, you always want to make your decisions after that candle closes, because then you get to see the overall sentiment of the candle and it allows you to read the market a lot better. So we can see we've closed down here, relatively bearish candle. It is closed on this support level. So I am still happy to stay in this trade, looking for it to come down 10 to 15 points. Okay, the market has broken down and it is starting to find support at this 7,300 level. So I'm just watching for how the market reacts. I'm really looking for some resistance now that it has broken below the MA200. If I don't see it, I will just come out of this trade. Okay, we've seen that reaction off of the MA200. Let me just come out of this trade. So I've exited for 12.5 points. Now the reason is that it has been holding at this 300 level right here. I'm showing support once, twice, and you can actually see this candle is also seeing a little bit of support also, so I was happy to get out there for around about 12.5 points, so better than 1-to-1 risk to reward. We're just at 20 past 8. So what I'm going to do now is go onto the daily time frame. Okay, we're on the daily time frame. The first thing is I haven't actually posted up a live trade video for a number of weeks. I have just been too busy. I've been working on Pro Trend Trader. It has taken up all of my time. But I am now getting back to posting these videos. What I'm going to do is post one a week. I'm going to record the trade that I take on the Tuesday and I will post it up on the Wednesday. Rather than doing separate videos for the Australian dollar, US dollar and the FTSE 100, what I am going to do is just record that trade on the Tuesday, so whichever market I take it off of, and then I will post that trade up on the Wednesday. What it means is that rather than having to watch the market each week and then try and force a trade out of that market, it allows me to only take the highest quality trades and then only ever show you those highest quality trades. So from today, well, first thing is from the Sunday analysis video, we went over this sloping support line right here, long-term sloping support and resistance, and we also went over this shorter-term sloping support and resistance also. Yesterday, we broke below this sloping support line, and what I went over with subscribers was we were looking to sell this market. We sold this market very, very nicely. It came down strongly. However, this morning, when we loaded up the charts, we were back above this sloping support line. You can see it's a pin bar. Now, rather than instantly being, okay, this is bullish, we've broken back up above the sloping support line, let's buy. Instead, we were looking at this key level of resistance right here. Now, the reason for that is we are in between the shorter term sloping support and resistance and the longer term sloping support and resistance. So whilst within this level, I'm not expecting the market to just rocket up. We opened up toward this key resistance area. Now, if we look back here, we can see the market pressed up, came down, it then broke up above, and came down and tested that level once again before pressing off on another bullish move. So it's given us evidence that this area right here tested as resistance, tested as support, on the way back down. You can see all the tails testing it as support once again. It's giving us that clue that this is a strong level of support and resistance, an area where both buyers and sellers are interested in this market. So when we opened up here, we were looking for price action to get a short. That is exactly what we've seen. The market came down very, very nicely. If we go onto the 5-minute time frame now, once again, just quickly, what we can actually see, just looking at the daily time frame there, is the market, let's just expand this, has pressed up from those levels where we exited this trade. So it looks like a very, very good exit, because if it had done this whilst I was still in the trade, certainly start to break through these levels, I would have exited for a much smaller profit. So nice trade. As always, guys, I hope that was helpful. Hope you've all had a good trading week. I'm James Orr, and thank you.